All right, welcome back to another episode of the Black Bullion Show. The Dow is temporarily back in the green on news that Pfizer has a drug in development, some positive trials came out for the Roni's shot, as we like to say. Also, the ADP Employment report shows 2.37 million jobs were added in the private sector in June. Though they were additions, they trail a little bit behind the 3.07 million jobs that were added just a month prior in May. And if you actually add both of the months' numbers up, they only make up 27% of the private sector losses from the April bloodbath. But still, on this news, we are seeing some risk on behavior, even with pundits thinking that we might be starting a new bull market, if you can believe them saying that. With all of this positivity, obviously, gold and silver have lost many of their recent gains. But honestly, I hope that silver continues to bleed a little bit more so I can personally re up on some of the white metal. Now, before we get into all of this news, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button, helps to get this economic evangelism out there to the masses. Now, here we have the Dow in the green. As you can see here on July 1st, we shot up, and in comparison to the previous 5 trading days, or I should say previous four, the Dow is in the green. It did hit a high, and now it's kind of retreating a little bit today, but it's been in the green relative to the other days. So um, here is, a pretty wild headline from Barron's reading: The Dow just had its best quarter since 1987. We might be witnessing the start of a new bull market. Now, I have no idea why anyone would feel this positive. As far as I can see, we're still dealing with the Ronies, as we like to call them, and that means we'll have continued uncertainty. And to drive the point home further, we actually had an article that was kind of similarly titled back in April, released by Forbes, basically saying how the prior week in April had one of the biggest gains. And, even though that's the case, we shouldn't be too positive. And what I'm about to read is why they say we shouldn't be too positive. And I quote: Stock market rallies and declines during the Great Depression. To show how deceiving stock market trends can be during a bear market, let's refer to the following chart. In it, you will find the percentage change in the Dow from its September 1929 peak, red line slash red text, and the gain or loss of each major market rally slash decline, red triangles, black text. To clarify, I have placed two markers labeled A and B on the chart, lower to middle of chart. For example, from point A shows that the Dow fell minus 35.7% during that decline, leaving it minus 58.7% below its September 1929 peak, point B. During the Depression, there were 10 major stock market rallies and 11 major declines. The rallies ranged from 8.5% to 93.9%, while the declines varied from 11.9% to 53.6%. About 7 months prior to the end of the Depression, the Dow finally hit bottom, losing a whopping 89.2%. The Dow wouldn't surpass its September 1929 peak until 1954, 25 years later. While I am not suggesting it will take 25 years this time, it could take a bit longer than we think. You see, we don't know how long the Ronies will linger. how much economic damage will be done, or how long it will take the US economy to return to normal. So here we have the chart that he referred to. And as you can see here, in this percentage change from peak, it just slowly churns downward. And one of the things I think he doesn't mention here is that it took us about, a couple decades to hit that peak again, but that's not even adjusted for inflation. If you adjust for that, then it actually took a little bit longer. So, how much did the Dow recoup after a decline? The previous chart shows that wide swings ups and downs were common during the Depression. The next chart shows the percentage of the loss that was regained after the Dow hit its next peak. For example, the Dow fell negative 14.7% in its first downturn, then rose 8.5%. After this 8.5% rise, the Dow had regained 49% of what it lost. Is the 202% gain correct? Yes, it is. However, the Dow was still about 22.9% below its September peak. Take a look at this. So, though we have these gains and also losses, they can be deceptive. And I'll end with this. Again, it's very common for stocks to rise and fall to a greater degree during a bear market. Therefore, it's important not to be fooled into thinking it's safe to go all in when we experience a market resurgence like we had this past week. Even so, it may be hard to fight the urge to load up on stocks during these rallies. But again, I caution you against it. Why? Because there is so much uncertainty surrounding the Ronies and in the business closures, no one can be sure how long it will last or how bad it will get. How long might it take to return to normal? So, that's why I say we need to have some clarity around this stuff. But still, we have some risk on behavior. And here we have the U.S. 10-year Treasury at 0.67. It rose 0.016 points. And what that basically means is that there are less people piling into the safe haven as they are now trying to enter into more risky asset classes. And here we have the ADP employment numbers showing jobs in positive territory. This is what I mentioned earlier for June. But as you can see, it's a bit of a downtrend that's starting to develop. And remember, I said that the summation of these two are still less than the whole of what occurred here in April of 2020. And speaking of jobs, the Hill actually put out an article stating Senate passes extension of application deadline for PPP small business loans. Remember, PPP stands for Paycheck Protection Program. Now, it was supposed to expire on Tuesday, yesterday, but they extended it to August 8th. So we basically have continued life support being added to the economy here. Now, let's check out the ISM manufacturing PMI, because I think this is one of the big ones that occurred today. Let's read here. The ISM manufacturing PMI for the U.S. jumped to 52.6 in June of 2020 from 43.1 in May, beating market forecasts of 49.5. The reading pointed to the biggest expansion in factory activity since April of 2019 after 3 straight months of the Roni disruptions. New orders, production, and prices rebounded in employment, and new export orders fell less. Demand, consumption, and inputs are reaching parity and are positioned for a demand-driven expansion cycle as we enter the second half of the year. So take a look at this. Manufacturing just jumped, and it's even doing better than it was last year. Um, so this was the big one, in my opinion. But we also got some additional news from Pfizer. Uh, Pfizer announced that they had some positive trial results from their the shots that they were testing. So with all of this news, where does that leave gold and silver? Well, leaves them a bit in the red. And take a look at some of the timelines here. We got the ISM reports around 10, and as you can see, there's a bit of a drop around 10. See that there? A bit of a drop around 10. We got the employment reports around 8:15, so a little bit after this is 8 o'clock here. A little bit after that, we saw a little bit of a dip. 8 o'clock here, saw a little bit of a dip after that, and then we also had the Pfizer report come out around 9 o'clock or so. Um, so you know, basically things are a little bit down in the dumps for the monetary metals. But in my opinion, we lost a little bit of the battle today, but we didn't lose the war against funny finances. I still think that today was primarily based off of the economic data that we got today. And who knows, maybe tomorrow we'll get some more economic data, or something else will happen that will cause the markets to swing again. So, everyone, that was your Wednesday. Tough day for the metals bulls, but it could also be a great day if you're looking for a flash sale, so to speak. So let me know what you guys think in the comment section below with all of this information. Thanks again. Please give the video a like. Please subscribe. It's Black Bullion.